Okay, let's get started. Thanks. We're at 60 folks almost. David, I'll throw it over to you. Thanks.
Sure. Thank you, Jeff. Welcome, everybody. Thank you for joining us today for our webinar on blockchain and insurance. Next slide, please. My name is David Verbeeten, and I'll be conducting this webinar with the assistance of my colleague, Sean McGrath. I'm up here in Canada, and Sean is in Ireland, and I believe we have people attending from other countries around the world. I'm going to go first, and I'm going to cover the insurance-specific content in this webinar. Afterwards, Sean will discuss the capabilities of the Ethereum blockchain on which Consensus builds its suite of products. And these products can help you implement the use cases that I will have discussed. We'll be happy to answer any questions, but please hold them till the end of our discussion, of our presentation. Our agenda today is to look at how blockchain technology can help the insurance industry meet various goals. Those goals can include engaging with customers more effectively, streamlining business processes and practices, entering new markets, creating new products, or simply saving money. Blockchain can help insurers do all these things and more. First, I'm going to take a few minutes to go over some of the basics of blockchain technology. I'm not going to go into too much technical depth because we are limited by time and possibly also interest, but I want to make sure that we're on the same page and that we have some of the basics in place before we dive into the use cases. Blockchains are decentralized databases, whereas most other databases that we use today and that we have used throughout human history are centralized. A typical database today is controlled by a single authority. Think of a bank. It handles transactions for its customers, and it makes an update to its ledger to record the outcome of those transactions, who sent what to whom, when, and where. And then the bank will reconcile its copy, its master ledger, with the ledgers of other banks. And this process of reconciliation is pretty time consuming, it's labor intensive, and it's also error prone. There's also the possibility of corruption because there's one single authority. So if the authority is corrupt, you can end up with accounting fraud. But blockchains don't work like this. They're not controlled by a single authority. Everyone who uses a blockchain has a copy of the ledger of transactions. That's why we say blockchains are decentralized or distributed, or we can also say replicated. Everyone has a copy if they're using the blockchain, and these copies are kept in sync by a common set of rules and by other technical features that ensure security. The original blockchain, I think we've all heard of it at this point, was Bitcoin, and it was launched in January of 2009, giving us cryptocurrency, which was the first successful peer-to-peer digital cash. We're able to send Bitcoin tokens of value from one account to another without an intermediary, without a single authority between us. So in this sense, Bitcoin is a revolution in trust. Now, people looked at what Bitcoin could do online, and they thought, let's extend the capabilities of Bitcoin from simple payments to more complex transactions and contracts. And that's why Ethereum was designed and launched in July of 2015. Ethereum is now the second largest blockchain by market cap. And the goal here was to allow, to set up a blockchain that would act as a world computer so that we could run computer programs known as smart contracts on a blockchain. Finally, blockchains can be public or private. A public blockchain is simply one, like Bitcoin or Ethereum, that anyone can sign up to and use, whereas a private blockchain is one whose participation is restricted. Whether public or private, blockchains give us many of the same benefits. These benefits include transparency, verifiability of data, traceability of data, speed and costs of transactions. They're fast and they're cheap. Fault tolerance. There's no single point of failure because blockchains are decentralized or distributed, and that means that they're very resilient to cyber attacks. And immutability of data. Once data is in a blockchain, it can no longer be changed, certainly not maliciously, without being detected by other members using the network. So Given these benefits, insurers have a lot to gain from blockchain. Given that insurance has tended to lag behind other areas of finance, uh, they can really press ahead with this new technology and maybe even leapfrog over some legacy systems to make themselves more efficient in the 21st century. Many use cases for insurance and blockchain can be conceived, and some have already been rolled out. Before we dive into these use cases, I just want to mention that we're going to go through them according to the three categories you see on this slide. Those are insurance with blockchain, insurance on blockchain, and insurance for blockchain. These categories I came up with to help people understand how we can implement blockchain technology in insurance. These categories are not absolute. They do overlap. They're really just designed to help our understanding because there's a lot of possible use cases, as we'll see. So we're going to go through each category in turn and the use cases that fit these categories most fully. So first, we're going to start with insurance with blockchain. What does that mean? Insurance with blockchain is about complementing existing business practices in the industry. And this complementary enhancement can be relatively simple. For instance, like paying your staff's salary over a blockchain, we could do that, or you can allow customers to pay premiums over a blockchain. We might think about doing that because blockchain transactions, as mentioned, are cheap and they're fast. But insurance with blockchain can be more thoroughgoing as well. The most promising implementation that I have in mind in this regard is around sharing data. So we're going to look at a few use cases in that regard in particular. Blockchains allow parties to share data in real time because, as I mentioned, they're replicated. And the full history of any file is always on a blockchain. It can't be tampered with by any party who may have access to that file. And as a result of these features, we're breaking down silos, and that's one of the major benefits of blockchains, is to break down silos that currently exist in the insurance industry and also in most other industries. And by doing this, we achieve enormous efficiencies, and we can also improve the quality of the data that we use. So let's take a look at some possible shared databases that we could set up with a blockchain in insurance. We could use a shared database to administer policies more effectively. For instance, if we bind policies on chain, or if we have a representation of a policy on chain, we also end up with an incontrovertible proof of insurance. So you can say goodbye to those little slips that are commonly found in many jurisdictions, for instance, for auto insurance. We can all have that online now, and we can share that proof of insurance with other parties quite easily due to the fact that the data is verifiable as to source. So we can share, for instance, proof of auto insurance with the police if we're stopped on the roadside. And we also get another benefit by having a better means of breaking down silos with regard to policy information, is that we reduce legal disputes around coverage. Because if there are various parties involved, brokers, for instance, broker binders, then we can clearly determine, when policy is incepted, for instance. Likewise, towers of risk or reinsurance treaties that typically involve multiple parties can use blockchain, can use shared databases to handle the documents and the contracts that require the signatures of multiple parties. And that way you can make sure that everyone is looking at the same data at the same time and is signing those documents for a common agreement as to terms, conditions, as well as risk allocation. This helps us reduce transcription errors and massively cuts down on the amount of emails that needs to be sent around all the parties who may need to have their signatures aligned and their understanding of the contractual terms aligned. Finally, we can think about streamlining first notice of loss through more effective policy administration. We can think of a blockchain, of a smart contract that is programmed to forward a first notice of loss when it's received by an insurer to all the other relevant stakeholders. And this can be automated. Now, next slide, please. Now, first notice of loss is the first stage in the claims handling process. And if we start building up a shared database of claims, we get all kinds of potential benefits for the insurance industry. To begin, we get a pretty solid industry-wide pool of loss data. It can be anonymized, of course, which can be used for superior actuarial analysis and rate setting by the bodies who do that work. We can also give users more control over their personal claims history. So when an insurer settles a claim, when it finalizes that claim, or even as it's managing the claim, it can sign the information over to the insured's individual blockchain account. And then that information becomes verifiable as to source, as to the insurer's, having reviewed that data and having finalized it. The insured can then decide, let's say when they're looking to buy new insurance, they can then decide to share that claims information with other insurance companies. And there will be no more second guessing because the insurance company can see, who handled the claim, for how much, and so on and so forth. Likewise, if you're sharing data more effectively and you can rely upon the data's integrity, you can also begin to automate aspects of subrogation and other aspects of claims accounting by using smart contracts. That's already being done by an insurance company in the United States. You get efficiencies from that automation. And of course, if we have better claims information, we can also, mitigate claims fraud more effectively. We can have, systems that that have that red flag suspicious claims for us. We can see if there's double booking of claims and similar incidents. So it's not just claims fraud through having, mitigating claims fraud through having better sharing and cooperation around claims files. We can also begin to put high-value items, the information about high-value items in particular, on schedules, on a shared database, on a blockchain. So we can begin to track the provenance of goods, including the entire supply chain, and we can also record the ownership across time. And this way we can identify when goods are counterfeit or when a fraudulent claim is being made against the high-value item. And that can be a diamond, it can be a very expensive bottle of wine, it can be a very luxurious piece of art. In a similar way, we can use the function of registries to put warranties on blockchain. We can apply warranties to the end of the supply chain, and then we can begin to manage those warranties across their life cycles. Warranties are typically handled by a number of stakeholders, including the insurance company, but also the vendor, and we can allow them to see data in real time and securely so that we can, if a claim is made against a warranty, we can then follow that claim as it's being handled by multiple parties. And there's never any doubt as to where the claim stands or the information in that claim. Finally, we can use a shared database to automate many aspects of reinsurance, from modeling to underwriting to compliance. So we can think about primary policy information being entered into a smart contract, onto a blockchain, and then that data being extracted from the blockchain and sent over to reinsurers, and that can be largely automated with smart contracts. One of the main advantages here is that it's data that is in real time. Having worked in reinsurance previously, the data that reinsurers typically handle is 6 to 9 months out of date in a submission. So if we have the information on a blockchain, we can be dealing with losses, for instance, loss information that is up to date, and we can also be handling information that is much more accurate and much more precise than is currently the case. So typically reinsurers now deal in broad categories of limit profiles. But if the primary information is on a blockchain, you would actually get the limit of every individual policy flowing through to the reinsurer for potentially automated modeling and underwriting. Compliance could also be part of such an industry-wide database, because not only reinsurers could access on a need-to-know basis the primary data on the blockchain, but also regulators could access that information for real-time oversight of compliance, and also for automation of a lot of regulatory tasks, because the information could be used to auto-populate a lot of compliance reports. As a result of these benefits and efficiencies, PwC in 2016, already a few years ago, estimated that global reinsurers could save anywhere between $5 and $10 billion per year by using an industry-wide shared database with blockchain. So now I'm going to look at insurance on blockchain, so another subset of use cases. Insurance on blockchain is about enabling new business models and practices. It's not about complementing existing practices like making data management more efficient and more reliable. It's about actually conducting insurance on a blockchain. And this is in some ways more radical than insurance with blockchain, but it's also a very exciting opportunity for innovation that can result in truly new products and markets. So blockchains are especially well suited to implementation of parametric products. And these are products that do not require subjective assessment of claims. They pay a lump sum to an insured party after an objective binary yes-no event has occurred, such as an earthquake of a certain magnitude in a given area. We can think of a cat bond as a parametric product. Now, these events, the events that trigger a parametric product, can be fed into a smart contract by a digital news feed, which we call an oracle. And in this way, by using a blockchain, we can actually automate all aspects of a parametric product, from the underwriting to the claims trigger and to the clearing and settlement of the claim. It can all be automated without any manual intervention, and no need for brokers either. So an example of a parametric product on a blockchain that actually already exists is flight delay and cancellation insurance. And so these are decentralized applications, or dApps, that are already in use. The customer pays a premium for a promised lump sum, and then in return, if a certain event occurs, which in this case is the flight being delayed by a certain amount of time, or the flight being diverted or canceled, the insured party will receive a lump sum. Now, the oracle, the digital news feed, can be hooked up to the smart contract that is used to accept the premium and establish the terms of the insurance. And it can push through that information about whether, let's say, a flight is 30 minutes late. And if the flight is late, then the smart contract will be triggered, and the rules in the smart contract will execute automatically, and all the claims will be settled and determined automatically, without any need for intervention, without any need for the insured party to have to call an agent or speak to anyone or send an email. Now, not all lines of insurance are going to lend themselves to indexation. But for those that do, such as catastrophe insurance and possibly crop insurance as well in certain markets, blockchains can really be used to create a truly superior, more efficient product, because it's easy to buy and easy to operate, where all the frictions that might now stand in the way of adoption are removed. We know from behavioral economics in particular that even minor frictions cause people to drop out of transactions. So when we are using a blockchain to actually conduct insurance, and we're automating most of the processes and maybe even all of the processes, including the friction of having to make the claim, when we do away with all of that, we actually make the product almost into a new entity because it becomes so easy to use, and therefore you have really potentially a new market to access. And especially in the developing world where you don't have saturation of insurance products and you don't have maturity and they're still growing and most people are not effectively insured, parametric products on a blockchain can really do a lot to increase access and to make products much more attractive. Now, one of the reasons why blockchains can do that in the developing world and elsewhere is because identities on blockchain are potentially very strong and robust. And that compares to our current internet, where identities are actually not good. We've been hearing recently about all kinds of breaches of privacy and all kinds of funny business with large centralized corporations like Google and Facebook using our information in ways that, they shouldn't be doing, in ways that we probably don't like, selling our information without our agreement. Blockchain doesn't do this. Blockchain, in fact, is the opposite. It allows individuals to have more control over their own data, and they can share that data effectively with others. So they can even hypothetically be paid for their data. Now, when you have a strong identity linked to a blockchain account, that identity can become very multifaceted and very robust, and you can have all kinds of information attached to that identity, which can then be shared by the individual with parties who the individual wants to know about him or herself. So it could be information that is germane to insurance for underwriting purposes. It can also be information like health data that you would share with your doctor, but that health data could also be shared with an insurer. So if you have a medical record assigned to your blockchain account, or an MRI or an X-ray, you can then choose to share that with an insurer if it's relevant for their underwriting process. So hypothetically, when we get to this point with very robust blockchain identity, underwriting is going to become a lot more comprehensive and a lot more efficient and accurate. And when we have good identity online, we're going to see we can really imagine a transformation in the way that insurance is distributed, because blockchains will enable new kinds of interactions between buyers and sellers and new kinds of marketplaces. Right now, when we are distributing, and direct distribution online is a major focus of the industry, and actually as it takes up the majority of insurtech funding and aspirations. But really, most of the efforts involve direct two-party interaction. So a potential insured will go online and then we'll go to Lemonade, let's say. And up here in Canada, we have Sonnet, which is similar. And they'll request a quote, and it's all about the speed of the quote. But there are still drawbacks with this arrangement because, of course, you need to be onboarded to each individual platform. You need to go through the process of, getting the quote, maybe filling out an application of varying degrees of complexity. And you can't just send one application to get quotes from all of these different insurance companies. But if you're using a blockchain, you can do that. You can fill out one application on one platform, send it out to the marketplace, and get many quotes in return. And those quotes will be blind. Only you can see them. No one else can see who you've received those quotes from. And that's because you're using blockchain identity and blockchain signatures and other technical features to allow for this kind of coordination over the same platform. So you can think of a platform that is designed with blockchain that allows you not only to get quotes, but then to select the insurance that you want from different carriers, hypothetically, and then manage all of those policies on the same dashboard without anyone else knowing who you're dealing with on the other side. So this is a real transformation for insurers. For insureds, of course, they get much better market access and potentially much better rates. And also for insurers, they get to sell their products more directly to customers, and they have a more level playing field as well. Finally, those same policies can be tokenized, which means that they can be turned into tokens on a blockchain. You can have a digital representation of the policy, and then you can think of ways in which those tokenized policies could be used, such as secondary market transfer, let's say, which could be effectively done on a blockchain. Finally, the last use case for insurance on blockchain is peer-to-peer insurance. And this is a pretty radical implementation, but it shows the potential of blockchain technology, that people are thinking about ways of using it to transform the very idea of an insurance company itself. So people are experimenting with creating pools that insure their own members, and in which the rules of mutual obligation are embedded as code into the smart contracts, so they're guaranteed to execute, and that you don't necessarily need outside parties involved or underwriting managers and roles like that. And they're even experimenting with using token economics so that we can think about communal claims handling, for instance. Whether or not these experiments will be successful, time will tell, but it does show the power of this technology, that people are looking at it to be able to change the very notion and the very way in which we do insurance today. We can also mention that people are setting up smart contracts, and this might be the most successful implementation of peer-to-peer that will evolve. People are using smart contracts, or looking at ways of using smart contracts to ensure other smart contracts. So the idea here is that you will have a pool that will be established, so that if something goes wrong with another smart contract that is performing a certain function that involves people's assets, then the smart contract that is dealing with the insurance pool will automatically pay the accounts on the other smart contract a certain amount of money to make them whole or somewhat whole as a result of losses they may have sustained. So this last point brings us to our final category. And that category is insurance for blockchain. Now, in the case that I just gave you, which was of using a smart contract to insure another smart contract, that would be insurance for blockchain by using insurance on blockchain. But in reality, insurance for blockchain is not really an implementation of blockchain technology. It doesn't have to be, and in most cases right now, it's not. It is a market opportunity for the insurance industry to extend capacity to the new risks of the blockchain ecosystem that is developing and expanding all around us. So insurance for blockchain already exists, and it's being used to back assets on exchanges, wallets, cold storage vaults, and other pieces of the blockchain infrastructure. The important point to keep in mind here is that we're not insuring the protocols. We're not insuring the blockchain networks themselves. That would be a kind of an accumulation risk that is not likely to be insured at this present time. And also because blockchains are decentralized, they have high fault tolerance, as I mentioned at the beginning of this presentation. So insurance for blockchain is for the applications and for the services that sit on top of those blockchains. And the reasons why those services and applications are vulnerable is precisely because they're not decentralized. They are centralized in the way that most conventional computer systems and most conventional services are centralized, and that's where the vulnerability resides. So if you have something like a wallet is used by people who are interacting on a blockchain to manage their accounts for them. So it's a service of convenience. It manages their accounts, it manages their signatures, which are known as private keys, and those signatures are attached more often than not to assets of value. So typically what people are concerned about is that if you're trusting a third party to, manage your signature and manage your identity, then if that third party is breached, you might lose to back up those funds. So a recent example of insurance for blockchain was a partnership announced between Curve in Israel and Munich Re. And now Curve is a wallet service for large institutions. And the idea here was that if something were to happen to the wallet being managed by Curve, their customers could be insured and be made whole. So Curve received $50 million in coverage, and why Curve stands out is that it received coverage for what we call hot wallets, whereas most coverage so far, such as Coinbase, a large exchange, which received $250 million a year or two ago from Lloyd's, was for cold storage, which is deemed to be less vulnerable. But Curve developed or implemented multi-party computation, which makes their wallets very secure. So Munich Re felt that it was a good bet. So of course, just like underwriting any other risk, you need to do your due diligence when underwriting these new blockchain risks and services. In the case of blockchain, this due diligence takes a long time because we don't have many precedents and we don't have many cases to go by. Smart contract code needs to be reviewed. The security features of the services being offered also need to be reviewed. And I would like to mention here that Consensus has software and products that can facilitate the underwriter's due diligence. So we have a group of professional engineers in a group called Diligence, by coincidence, who provide audits of smart contracts to make sure those smart contracts don't have bugs in them, because those smart contracts can control funds. And we have MythX, which is also an auditing service, but it's a software that prepares you for the professional audit. And finally, we also have a group and a product known as Alethio, which is a data analytics platform and what we call a blockchain explorer. So you can monitor the status of the Ethereum network and the status of various smart contracts and the traffic and the transactions that are being used in relation to them, so that you can react to changes before they might impact your project. So these are certain services, certain tools developed by Consensus that could help insurers underwrite blockchain risks. So this is a good point at which to hand over to my colleague, Sean, who will now go over some reasons why Ethereum is the best blockchain for your enterprise, and why Consensus, which builds mostly on Ethereum, is the best company for you to get on blockchain.
Cool. Thanks very much, David. Hopefully you guys can hear me okay. So as I mentioned, I'm just going to quickly run through why Ethereum, so why the Ethereum blockchain, and then I'll have a quick look at Consensus and some of the products and services we provide which can help insurers on their blockchain journey. So to start off with, why Ethereum? Ethereum is the blockchain which Consensus builds upon. And this is because it's the largest blockchain ecosystem which has the richest functionality. So on the screen is a couple of the aspects of the Ethereum blockchain which kind of makes it stand above the rest for us. First of them being smart contracts. The Ethereum blockchain has improved capabilities because of its ability to program smart contracts, which can effectively program any programmable logic onto the blockchain. So this is kind of a step beyond the original Bitcoin blockchain, which originally just allowed payments. The smart contracts allow you to complete anything which you can effectively program. Secondly, Ethereum is vendor neutral. So Ethereum was developed by the Ethereum Foundation and maintained by them, which is a non-profit organization, and therefore it's not tied into any vendors. Thirdly, interoperability. Ethereum provides the ability to have both public nets and private nets, and it also provides interoperability between those public and private Ethereum blockchains. For governance then, private and permissioned Ethereum blockchains can be used to answer specific enterprise and governmental use cases because of the high degree of control you can have over the blockchain. The Ethereum community as well is one of the most rapidly growing communities and is the largest developer community in the blockchain space, currently with over 150,000 developers working on improving and maintaining the Ethereum blockchain. The Ethereum blockchain is one of the most trusted blockchains with multi-billions of dollars of value across both cryptocurrency and assets being protected and stored on the public Ethereum mainnet. The Enterprise Ethereum Alliance is a group, a consortium of over 350 companies worldwide which are backing the Ethereum blockchain. And I'll speak a little bit more about that in my next slide. But this is the fastest growing blockchain consortium currently. And finally, one of the key benefits which blockchain enables is tokenization of assets and tokenization of various tangible things. And Ethereum is the dominant platform for the token ecosystem. So many kind of tokenization events and tokens which you hear of, the vast majority of these are built on top of Ethereum blockchain. So the Enterprise Ethereum Alliance is a group, a blockchain consortium. It's a non-profit consortium made of over 350 members, with some of the largest companies in the world, including Accenture, IBM, Intel, JP Morgan, just to name a few. So the Enterprise Ethereum Alliance works in over 45 countries, and what they do is they contribute standards and specifications across a range of industries. The Enterprise Ethereum Alliance has established a testnet and certification process to ensure that any blockchain standards and protocols being built on top of Ethereum meet a minimum standard. So this is obviously hugely beneficial for the ecosystem. Currently, their V2 of the client spec standard is in operation and is contributed to by over 50 authors. And as mentioned, Ethereum allows both public and private blockchain implementations, and it has a wide range of purpose-built implementations for enterprise. So if you look at the screen, you can see Quorum, which is one of the most popular ones, which is an open source project led by JP Morgan alongside Consensus. It's a fork of the Go Ethereum blockchain, and it was built specifically for private and permissioned blockchains. It supports network permissioning, transaction privacy, and transaction finality with RAFT or IBFT 1.0 consensus. It enables a huge throughput of transactions, much higher than the mainnet, with over hundreds of transactions per second. To put that into context, for example, PayPal would have roughly 193 transactions per second. So on a private network hosted by Quorum, you can see almost similar transactions per second. Kaleido then is a former Consensus product. It's one of our Consensus portfolio companies, which is effectively a blockchain business cloud. It really gives blockchain as a service. It's a full stack platform which enables you to build and run cross-cloud hybrid enterprise ecosystems. So effectively, it's a really easy way to set up your own blockchain with in just a very few clicks. And they have partnerships with AWS and Azure, and they offer no-charge access to their software as a service platform for business organizations, which allows businesses to register, spin up, and configure a custom blockchain environment in just a matter of minutes. And finally, Hyperledger Besu. So this was previously known as Pantheon, if that is familiar with anyone. So this has recently been accepted into the Hyperledger Foundation. So this is an open source project which is created by a team of protocol engineers within Consensus called Pegasus, and it was created under a flexible Apache 2.0 license, which recently was accepted into the Hyperledger Foundation. So this is a brand new client written in Java, which has been built to support both public and private blockchains. It supports network permissioning, and transaction privacy. They also expect zero-knowledge proofs to be integrated before the end of this year. Transaction finality is supported and has IBFT 2.0 consensus mechanisms, which is a further increase from the 1.0, which is used by JP Morgan's Quorum. It's available for enterprise license, and there's support plans available. And similarly to Quorum, it also supports over hundreds of transactions per second. I'll next quickly look at a consensus, some of our products and the services that we provide to help businesses, enterprises, and governments to use blockchain to kind of help them on their insurance journey. So there's a selection of our products up here. So some of them which are probably most relevant would be Uport. As David mentioned, self-sovereign digital identity on the blockchain is hugely important to both kind of facilitate underwriting and on other aspects of insurance. And Uport is a product which Consensus have built, which enables you to create and control your own digital identity on top of the blockchain. Similarly, Alethio, David mentioned, is our data analytics platform, which enables you to kind of manage and view analytics on kind of activity on the Ethereum blockchain, both private and public. Codify is a recently launched platform product which we've built, which is kind of aiming to be the blockchain operating system for global commerce and finance. So effectively what Codify is trying to build, bring the manufacturing cost of creating digital financial assets down to zero. So this is going to be a kind of a very simple, easy to use blockchain operating system where you can kind of create and digitize financial assets and then ultimately kind of trade these on secondary markets. This could be like, obviously this will have huge impacts for the financial system and insurance with that. MythX, Dave mentioned as well, is a product built by Consensus Diligence, which is a premier security analysis service for Ethereum smart contracts. So this is a product which you can use to kind of audit and review the security for your smart contracts to ensure they're meeting the top standards globally for security. So Pegasus are our team who've built the Hyperledger Besu blockchain client, which I've mentioned previously. Similarly with Kaleido, who are building a blockchain platform as a service with partnerships with both AWS and Azure. Infura then on the public side is a global network of high performance servers for Ethereum and IPFS. And this is currently one of the most used decentralized apps globally, with over 10 billion requests made to it every single day. A couple of other ones which aren't on the screen but are worth mentioning is maybe Trium, which is Consensus's supply chain platform, which enables you to kind of track provenance of goods securely and verifiably on a blockchain, which can be used kind of for tracking and ensuring the provenance of high value items. And also TrueSet, which is a product for tracking of data on the blockchain and kind of getting verification from crowds about the veracity of data, which is then stored on the blockchain. Consensus Solutions is how Consensus kind of works to sell these products, to implement these products and support these products. And we also help corporates and governments understand and adopt blockchain technology. And we bring them through the journey of building new solutions that harness the power of the Ethereum blockchain. So we do this through a range of activities. We do a lot of education, so discovery workshops, executive training and technical training on blockchain and Ethereum specifically. We have a wide range of advisory resources which we can kind of come in and do strategy, use case discovery, and solution architecture and design when an enterprise is looking to see what sort of blockchain use case would work for them and also how they could ultimately implement it. Products, I've mentioned a couple of these, but we build protocol and infrastructure components. With Kaleido, we have a blockchain platform as a service. Through Uport, we can provide blockchain digital identity solutions, tokenization through things like Codify, and track and trace products, which again is our Trium product, which I mentioned earlier. Alongside that, we also provide support and in developing your blockchain solution. So we provide product and project management skills, agile application development, token design and launch, and assistance in launching those tokens, smart contract auditing through our diligence team, and we're also always open to co-investing in promising blockchain projects, be it in insurance or other industries. Beyond that, we're also very skilled and experienced in scaling startups. So we have within Consensus, we've scaled and launched and spun out a number of very successful blockchain businesses or blockchain products. Kaleido being a key example of one of these, which was scaled up by Consensus, now spin out into an independent company. We provide ongoing support, maintenance and upgrades, and full managed services for products which we sell and develop. So next, just a couple of examples of enterprises and government partners which we have worked with and partnered with in the past and currently are. So the Smart Dubai team, we have partnered, we're the blockchain partner for the Smart Dubai program, which they're looking to kind of make Dubai one of the smartest cities in the world. The European Commission, we've partnered with them for the EU Blockchain Observatory. We work with them producing a lot of their blockchain insights and ideation pieces. We've worked with a wide range of financial services and asset tokenization platforms. Some of the ones that jump out here, the South African Reserve Bank. We're the key delivery partner for the Congo product, which is a trade financing platform, which we're providing the kind of blockchain expertise on. We've worked with BNP Paribas, LiquidShare, Union Bank, and Santander are some of the main clients we've worked with in the past. Similarly, our Triumph product has worked in creating supply chain and provenance workflows for a number of really big companies. For example, GSK, the World Wildlife Foundation, Procter & Gamble, Pfizer, and we've also done work with GVMH and Louis Vuitton in Paris, creating kind of provenance tracking platforms for them. As well as that, we've also done a number of identity and certification products. Most notably, maybe in the city of Zug, where Uport was used to create a digital identity for the citizens of Zug in Switzerland, and which was used to kind of access services within the city. We've also created identity and certification kind of pilots and products for BNP Paribas and Dubai Properties Group. Pardon. So that's kind of it from us then. I guess we'll open the floor now to any questions if there are any. I don't know, Jeff, if you're going to coordinate these, if you're still with us.
Yes, I'm still here. How's it going? Couple questions we have in the chat. Let's see here. I'm not sure we have the answer. In non-crypto related blockchains like this, what is the consensus mechanism for new blocks? And what is the incentive of participants to verify blocks absent a crypto component? So I'm imagining that it can be customizable. David, maybe you can talk to this a little bit more, but IBFT2 is used in Hyperledger Besu, and in Kaleido, I think you can have a couple different types, like proof of authority in addition to IBFT. David, do you have any more insight on that?
Sorry, can you repeat the question? I'm just looking for it in the chat. In non-related blockchains like this, well, Consensus is operating off of Ethereum, so it will be based on, blocks are added according to the protocol, the Ethereum protocol, and there is a reward, just like there's a reward with Bitcoin. Am I missing something, Sean? Would you have anything to add?
I think maybe in the question might be relating more to the private blockchains where there isn't the kind of the Ether reward. And yeah, Jeff mentioned touched on a couple of them. I think the IBFT is one, and one we see a lot in Kaleido in kind of enterprise blockchains is the use of proof of authority, where a predetermined group of people who are given the authority to validate and verify blocks. In these cases, there won't necessarily be a crypto reward, but they're kind of a group of people who are entrusted with maintaining and ensuring the accuracy of the blocks.
Right. I mean, of course, in that sense, if it's a private or permissioned blockchain with restricted participation, like an industry consortium, let's say a group of banks in a network or a group of insurers, and the incentives are the efficiencies that they hope to gain and the new products and the new markets that they hope to gain. So it's a different incentive to run the network. So another question.
Just a quick note that this webinar will be made available via email and also be on our website, and we'll likely send out the slides as well. This might be one that we don't know. We have released a paper recently with the European blockchain group, but do we know, following European EIDAS regulation, can we say a PV key sign for a contract is valid? Do you guys know anything about regulations over in Europe?
Sean, you're in Ireland. Do you have a sense of where that's headed?
I am, but unfortunately, no, I'm not entirely sure about that. Probably something we can take offline.
I mean, it's a good question. I mean, I believe it's one that will be resolved like a lot of digital issues that were resolved as the internet was developed and you had to change the way you did business. With the recent announcement by China, for instance, that they're going to embrace blockchain for innovation, I think we can see where the world is headed and where governments are headed with regard to accepting, for instance, blockchain signatures as valid. I think we're going to, whether that has been determined or not, and I don't think it's been determined in every jurisdiction. It is something that will be determined as blockchains and their applications become more widely used and become a bigger part of everyday life. I don't have any doubt about that.
We'll just do two more questions. What if the Oracle is hacked? David, any idea about that?
Yeah, that's a good question. Absolutely. I mean, oracles will need insurance too. So when we're speaking about insurance for blockchain, well, an oracle is hypothetically a centralized, it can be, most often will be, a centralized piece of infrastructure controlled by an authority, unlike the blockchain itself. And so anything that has that centralized characteristic is vulnerable, just like centralized systems today, cyber systems, cyber insurance. So yes, we're going to need insurance for oracles and for the, let's say hypothetically, even the ensuing damage that oracles might cause if they're feeding information into a smart contract that has control over funds or even control potentially over physical systems like machines that could, hurt somebody or damage property. So absolutely, good question.
And we have I think Sean mentioned we have an Oracle blockchain solution called Rhombus that is a consensus portfolio company. Last question, are you aware of any medical benefits insurance claims blockchain implementations? You may have already answered this, David, but maybe you can touch on it again, or any, and also.
Absolutely. I touched upon it briefly in the webinar. If you're looking at shared databases and the development of shared databases on blockchain, then when you have a robust identity, that identity can include your health information and your medical data directly and verifiably directly from your medical practitioner and from a hospital like an X-ray or an MRI. And then you can have the ability to send that information over to an insurer. And then they can really trust that information is coming from where it is coming from, and not even where you say it's coming from, because you can see the entire history of the file up front. So yes, it will have, when we have integrated shared databases and we have, even different industries and different contexts interacting and building up these robust identities, yes, you're going to be able to share all kinds of aspects about yourself, including medical data and other data that can all go into the underwriting process and even automate parts of it.
Great. Thank you so much, David and Sean, and everyone for attending. Really appreciate it. And we'll have more of these webinars soon. So keep an eye out on our website and blog and social channels and email as well.
Thank you.
Thank you.